Burns, good to see you. Before we get to some of the names that you've brought with you today, what's your read right now on the state of this rebound rally? Market sort of peaked above these levels everyone was watching today, and then got a little bashful, came back down. Does that mean anything to you?
In the near term, it tends to be noise. The thing that we really believe investors should be focused on more than anything is the inflation print that we're going to be seeing coming out on Wednesday of this week. It's really a lot of strategists have talked about, should we be focusing on peak inflation or recession talk, and you can't really separate them, because if we do in fact get some indication that we might be at or near a peak inflation, then that gives the Federal Reserve more tools to, in fact, fight a possible recession, at least have a better chance of engineering a softer landing.
Yeah, it certainly refreshes consumers' ability to keep the economy growing on their own with gasoline prices coming down. Let's get to some of the names, though, that you like in here. Texas Instruments, we obviously see a little bit of stress in the rest of the semi space today, but Texas Instruments has actually held up better. What's the story there?
Well, any chip maker right now feels a bit like a contrarian play. They've all been out of favor, but TI is a little bit unique. First of all, you have valuation on your side. The stock is trading at about a 20% discount to the S&P Info Tech Index. Usually it trades at a premium. So you've got the discount there. They have a dividend yield of nearly 3% that they raised by 13% last year, and that's supported by free cash flow that's gone up by double-digit rates for nearly 2 decades. And really what they do is it's a little bit of a simpler story than some of the rest of them. They're the leader in analog chips, which is kind of the blocking and tackling of the chip world. They collect data from everyday devices and convert it to digital form, which makes it a play on the Internet of Things, and as well the type of name for which you can take advantage of increased infrastructure spending that we expect to see going forward.
Let's talk about quickly Stanley Black & Decker. Obviously, along with the housing-related group, has really gotten hit pretty hard.
Yeah, now that's another one that it's a name that's been out of favor, but you're looking at a stock right now that's trading at only 11 times earnings as a result, whereas their peers are 18 or 19 times earnings. They also have an attractive dividend yield that's twice that of treasuries, and it's also one that they raised it last year, which indicates management's confidence in the business. You've got great brands. There's Stanley and Black & Decker, obviously. There's DeWalt Tools, and one that's really interesting is Craftsman Tools. They bought that from Sears a little while back, and they have a legendary reputation for quality. The first thing, when I bought my first home, my father bought me a set of Craftsman Tools, and when Stanley Black & Decker acquired that, they've been able to increase the number of distribution points and really revitalize the brand. And it's a misunderstood name. It tends to get lumped in with industrials, when really this is a consumer brand company, and as a result of their great brand names, they have good pricing power.
Yeah, long-term sort of quality management and things like that as well. Burns, thank you. Appreciate it.